It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, March the 31st, 2016. Got another jam-packed newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and the euro. End of the first quarter is almost behind us this evening. April Fool's Day tomorrow. Traders are bracing themselves ahead of what is expected to be a pretty positive jobs report tomorrow morning at 8:30 Eastern Time. We have a lot to prepare for tomorrow with a lot of news tomorrow morning. We got markets that appear to be winding up for some pretty decent action tomorrow. First of the month, first of the second quarter. Oh boy, never a dull moment here for traders, no matter which market you're looking at. Tonight we're starting out with crude. Crude looking ready to finish this bearish correction and head back to the highs, but we need to see the bears complete their third leg down and then fail before the buyers will try to take it higher tomorrow. Get a pretty interesting chart on the oil. The E-mini S&P is range bound this evening and looking to revisit the highs tomorrow, but we have a recent bear channel telling us the sellers will likely give this one more try before it goes higher. Pretty interesting range on the S&P for tomorrow. The gold, the yellow metal, is bearish in the short term, but setting up for a move back up to the highs tomorrow after the bears can finish their wedge correction. Really interesting chart on the gold tonight for you guys. And last but not least on the euro, euro is bullish with a spike and wedge. That's right, spike and wedge this evening. This tells us this might be a little bit tricky to find the best entries back to the highs tomorrow, but we definitely have direction on the euro for tomorrow, right? Looking like it's going to try to get back to those highs again. Got a great set of charts for you guys tonight. Before we jump into those charts, though, I do want to remind you, the only place to watch the full-length version of this nightly newsletter is over here on our trading blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's only a small portion of the full-length version, which you can find by clicking on the link in the description of the YouTube video and come over and join us here at Sideways Markets. While you're here at Sideways Markets watching the full-length version of our nightly newsletter, don't forget to grab your seat and your free pass to attend our live trade room as a guest in the upper left-hand corner. Don't forget to register to be a member of our newsletter mailing list in the lower left-hand corner. Then you'll get an email from me. Promise no spam. Right? Only an email every evening when that nightly newsletter goes live between 7 o'clock and 8 o'clock Eastern Time, Monday through Thursday. You can also download all the charts you see me using in tonight's video by following that link right below the video on our blog. And then over on the right-hand side, you can join as a trial member to learn more about the strategies we use and what it means to be a student here at School of Trade. And don't forget, we always have someone standing by 24/7, 365 to give you guys a hand. Winding up here, a week here. Boy, what a week. Last few drops of March, last few moments of the first quarter. It was a wild one. Another big day ahead of us. Tomorrow's Friday, April the 1st. I can promise you this, there'll be no foolery coming out of my office tomorrow. You can rest assured I will be my normal serious I can't even say that with a straight face on. You know I always like to have some fun with you guys, but I promise, right? No more hidden tricks up my sleeve for tomorrow. But you know it's always those people around you that are going to be looking to scare you tomorrow, right? So keep an eye out. Look over your shoulder a few times tomorrow if you participate with your friends. Bottom line is tomorrow morning, we've been talking about this all week here. We get the employment number tomorrow, the jobs report. We saw a nice strong jobless claims today. We saw a good report on Wednesday. All signs point to a strong number for the employment situation tomorrow. It's always a bit of a variable when everything has been pointing towards one direction leading up to it. What I mean by that is that you had the employment number on Wednesday, jobless claims today, and all of those point for a pretty rosy jobs report, and most analysts are most likely telling their traders for tomorrow, expect a nice, decent jobs number tomorrow morning. I would expect the market to have already priced this in, right? I would expect most of these markets to have already adjusted to this anticipated number, so it may be a little bit of a dull reaction tomorrow. In all reality, personally, between you and I, right, I hope it's a dull reaction because the volatility that comes after a surprising report is oftentimes untradeable. Remember, big news events. The employment number, the first Friday of every month, right, which of course is the first Friday of April being tomorrow, right? The the big GDP, the quarterly GDP reports, the FOMC report, the inventory on Wednesdays for crude. These are some major news reports that they get so volatile and so illiquid, they become too dangerous to really trade safely. So, I'll tell you, I kind of hope tomorrow is a little bit of a sleeper around 8:30, just so we can actually trade going into 9 o'clock, 9:30. Because usually what happens on a non-farm Friday is you lose about a half an hour because it's so volatile and you don't want to take those big risks. So anticipating the market to be a little bit priced in already based on what we've seen already this week. We'll obviously have to wait and see what that looks like tomorrow morning, and our trade room will open up at 8 o'clock Eastern time, and we'll be watching this all together with our students. We also have 9:45 news, 10 o'clock news tomorrow morning, so 8:30, 9:45, and 10 o'clock. We get a lot of news on the calendar for tomorrow. Of course, though, the major news report, though, will be that employment number at 8:30 a.m. Don't forget, tomorrow's a Friday, early in, early out. It's okay to have positions open into the afternoon session on Friday or the weekend, but I always recommend especially my new traders out there, no getting into new positions after 11 a.m. Eastern time on a Friday. We'll teach you guys all those details here, part of our trading plan here at School of Trade. Look forward to seeing you guys as a brand new student. Let's jump into those charts here now that you guys have our news plan for tomorrow, the schedule for tomorrow. Starting out here with crude, we'll go crude, S&P, gold, and we'll wrap up with some euro. Crude oil looks ready to finish this bearish correction and head back to the highs, but we need to see the bears complete their third leg down and then fail before the buyers will try to buy it higher. We have multiple channels, a wedge and a measured move to work with this evening. The major bull channel tells us the buyers will be looking to retest the range highs at 39.04. The recent bear channel tells us the sellers will likely complete rotation back to the lows, which also completes a measured move off the highs. And we expect to see the buyers look for a double overshoot at those bear channel lows to buy, and then again look for seller failure at the bear channel high for the most reliable trades and the move back to the highs. Sellers. We're a little bit late to be selling right now. This is a little bit low to be selling, right? We don't want to make a habit of selling low or buying high. Right now, we're pretty low off that high. So sellers need to wait for a higher price to sell, such as up around the wedge target overhead. As you can see here, we've got this bull channel coming up. This bull channel, of course, tells us those buyers are going to be gunning for 39.04, pending measured move target, and of course a runaway target up at Wednesday's highs. Those are going to be the levels that buyers are going to be hunting for tomorrow. Okay, and the bull move higher here tells us this is likely just a correctionary move before, we get that price going back higher. Now, with that said, we also have a short-term channel that also, as you can see here, creates this triangle or wedge formation you can see right now, and that will be an area of resistance at the point of that wedge. This would be considered a bull wedge, right, if you want to call it a wedge or a triangle, right, whatever you want to call it. So trap low, right, to send that price higher. All of these signs right now point to price moving back towards those highs. We also can see here a measured move back down to that 37.94. It's also a double down off of the move off the highs. It kind of all lines up there perfectly. And of course, that will lead into that kind of pending. Sorry about that. Wrong hotkey there. There we go. That pending, right, measured move. It's always a little bit difficult for me to give you guys those big measured moves ahead of time because I don't know how far it will pull back right now, right? So ultimately, I think the most important thing is we know direction right now. Now, keep in mind, everything I'm talking about tonight has one big variable, and that's tomorrow morning at 8:30 a.m. Eastern time. So I probably should take a moment to remind you here that when we have big news, such as the non-farm report, the employment situation, the jobs report, right? Different ways of describing that news report tomorrow morning at 8:30 a.m. When we have that news report come out, it's just like any other big market-moving report, and that is we're going to be lucky if this thing doesn't just shake this thing all over the place here, and we may have to go back to adjusting our charts tomorrow morning. It'll be a good thing you're with us tomorrow morning in the trade room, right? That way you can see how we'll adjust to tomorrow's news because, again, we have such a huge news report tomorrow. It's difficult for us to anticipate where that news is going to send this thing. And one last thing about the news. if we get a dramatic reaction in one direction or the other to that major news report tomorrow, promise me you're not going to try to step in front of a freight train. If it shoots lower, please do not try to just blindly buy. We don't just blindly buy or sell after news. We have to wait for that news to calm down, find a new direction, and then go in that direction. So just a word of caution tomorrow, 8:30 a.m., that big news report coming out. Be careful, right? We have some definite directional clues right now, and we get a great strategy ahead for tomorrow. But again, the big variable tomorrow morning is 8:30 a.m. Eastern time. Usually it sticks up, right? Usually it holds together, but every once in a while, though, we get those kind of groundbreaking events that come out and everything just gets tossed on its heels. And of course, we're going to be there with you guys tomorrow morning to make sure we're putting the pieces back together after that news comes out at 8:30. So everything I'm talking about tonight will be kind of assuming that that news tomorrow doesn't completely turn everything right on its heels and send price spiraling in one direction or the other, right? We'll be watching that tomorrow morning live in real time. So with that said, we now know, of course, right, bull channel tells us, bull triangle tells us, right, this market's going to want to go back higher here. The bear channel really gives the buyers a little bit of a clue here as far as what they're looking for. First of all, if price goes lower, buyers are going to be drooling over a double overshoot, right? A double overshoot of that channel low will be your first opportunity here to be a buyer. That double overshoot will then lead to seller failure, right? Then back up to the high of the channel, seller failure at the high of the channel, and then back up to that range high. So once again, look for that double overshoot at the low of that channel. Make sure you know how to trade a double overshoot. Don't forget, we'll be with you guys tomorrow morning to walk you through it in the trade room. We teach these double overshoots in our advanced course as part of our trade setups. But again, double overshoot right at the low of that channel. Buyers will look for that to buy a nice deep correction lower, right? If you don't want to buy the double overshoot, look for seller failure, right, into strength, into continuations, and then look for targets back at the wedge target, right, back at the range high target, and of course that pending measured move wherever that will be, and then a runaway target here all the way up to Wednesday's high at 39.86. Okay. Now, what if you want to be a seller right now? If you're looking for a seller right now, it's really too low right now. We're expecting channel rotation back to the low of that channel, right? That's where the buyers will be looking to buy, right? It'll be a little bit aggressive on the way down. That's why I'm going to wait for that double overshoot to buy, right? Wait for that specific scenario to buy when it's most reliable. Sellers now, they're going to want to see price go back up to that high and then buyer failure to send it back down. All right, you're going to have to wait for that buyer failure, but get it off these lows. If I'm a seller, I'm looking for an opportunity right around this area using the underbelly of that bull channel, the wedge resistance, right? That whole area right there is going to be key resistance. So price goes back to the high, buyers try to buy into it. If they fail, that's where sellers can now look for that selling opportunity. But just keep in mind though, double overshoot for the buyers, that's going to be the earliest. Seller failure for the buyers, back into the channel highs.